Hello and welcome to the Business Standard Morning Show. I'm Kanishka Gupta and let's have a look at the stories for the day. The numbers for the first half of the current financial year are with us now, and they suggest that the Indian economy did quite well despite rough global weather and lingering pandemic shock. Fiscal deficit is under control, GST revenue collection is breaking records, and the sale of automobiles is in the fast lane now. But will it sustain in the second half of the financial year? Our next report has the answer.
You try to keep your expenses in line with what you earn. You balance your budget. Well, the government does something along similar lines. And there's good news for the North Block on that front. Gross GST collections in October have come in at about 1.52 trillion rupees. This is the second highest monthly collection ever, next only to that for April this year. It is also the second time that collections have crossed 1.5 trillion rupees. In short, revenues are up. That is the cherry on the cake since GST collections had remained above the 1.4 trillion rupee mark for the 7th straight month in September. Tax collections data for the first half of the current financial year were already promising. Direct taxes grew by 24%, while GST clocked an increase of 31%. Up to that point, the collection numbers boded well as far as the government staying below the fiscal deficit target was concerned. The FY23 target is 6.4% of GDP. Headwinds do exist. There has been a revenue shortfall on account of a reduction in excise duty on petroleum products. Then, there is the extra expenditure due to the extension of the free food ration scheme and an increase in fertilizer subsidies. But the government can breathe easy due to savings on account of lower food procurement and the unused funds allocated to a number of ministries. As a result, a confident centre has planned for a lower borrowing during the second half of FY23. The centre's fiscal deficit for the first half also came in at 6.2 trillion rupees, or 37% of the full year budget estimate. October also brought with it more good news on the consumption front. Maruti Suzuki, India's largest car maker, saw dispatches rise 21% year-on-year in October. But the growth came on a low base since a semiconductor shortage had cut into production in the comparable period. Mahindra & Mahindra's passenger vehicle dispatches jumped 60%. The company's tractor sales also rose 11%, despite analysts projecting a fall. While Tata Motors saw PV dispatches rise 33%, commercial vehicle sales fell 2%. However, Bajaj Auto's total dispatches fell 13% year-on-year in October. While weak exports proved to be a drag, domestic sales also rose just 4%. The reason may be, as brokerage firm Nomura projected, that the festival season demand remained K-shaped in October. While the first half has brought good news for the government, how will the second one play out? Bank of Baroda Chief Economist Madan Sabnavis says that for the second half, the critical factor is whether consumption continues at the same pace seen in the first half. The economy has really benefited from the pent-up demand syndrome. Notwithstanding high inflation, people have continued to spend, and that has reflected in the GST collection numbers. But Sabnavis says there is a question mark on whether people will continue spending given the fact that inflation shows few signs of moderating. While it is possible that this level of spending will continue in October and November, albeit with some weakness, there could be a tapering in consumption after that. Sabnavis says that this would also mean that the buoyancy seen in GST collections may not be sustained. A major part of spending on account of the free food program and further fertilizer subsidies will reflect in the second half of the fiscal. The budget deficit may then come under pressure as a slowdown is expected in the overall tax revenue. Sabnavis also says that while non-debt capital receipts at this stage may look impressive, achieving the 65,000 crore rupee disinvestment target requires an additional 30,000 crore mop-up, for which there are no concrete plans. The pressure on fiscal deficit may not be too significant, however, and can be contained at 0.2 to 0.3% of GDP, Sabnavis says.
Also, we should remember that in terms of non-debt capital receipts, which is primarily disinvestment, the number looks impressive because of one major disinvestment which we have had. But 65,000 crores is the target. We still need to do something like 30,000 crores. And as of now, we don't see any concrete plans for raising that kind of money. So to my mind, there would be some kind of pressures which would come in terms of upsetting the fiscal deficit number. However, it may not be too significant, maybe not more than 0.2, 0.3% of GDP. And we should also remember that the GDP number, which is the denominator, would tend to be exaggerated on account of higher nominal GDP emanating from higher inflation, because we use the GDP deflator out here. And therefore, we could be getting a denominator which is increasing by 18 to 20% rather than 11%, which was projected by the government. So all this means that even if there's a slippage in the numerator, I think a denominator will provide a lot of cushion.
Going ahead, India won't be able to escape the effects of the projected global recession completely unscathed. Amid the external turmoil, healthy domestic demand could prove to be the determining factor for the economy.
World over, policymakers have been grappling with one question: can there be economic growth without fueling global warming? Melting icebergs, extreme heat waves, and frequent flooding are no more the tip of the iceberg. The world is now warmer by 1 degree Celsius since 1900. A new UN report, which came out just days ahead of the COP27 meet, has warned that governments' plans to cut emissions would not be enough to avoid catastrophic global warming. So, what do the new report's findings mean for the climate change threats India faces? And what will be its agenda at the COP27 meeting? Let's find out.
Heat waves can be life-threatening. It is important to recognize their effects. High fever, elevated heart rate, and even loss of consciousness can occur. The last 7 years were the warmest on record for our globe, and this year, our national capital was hit by 5 heat waves between March and May, and in one of them, the mercury shot up to a record 49.2 degrees Celsius. Sometimes, hard numbers get the message across better. Heat waves cost India an income loss of 5.4% of gross domestic product in 2021. The Climate Transparency Report said that this was the highest such loss among G20 nations. There was also a 55% jump in deaths due to extreme heat in India. This was revealed by a comparison between a Lancet Studies data from 2 periods. The first one lasted from 2000 to 2004 and the second from 2017 to 2021. And the Center for Science and Environment says heat waves in India are expected to worsen with the change in climate. The consequences of our fossil fuel dependence were more visible than ever in 2022. Europe was hit by heat waves. Floods overwhelmed Pakistan. China, the Horn of Africa, and the United States faced prolonged and severe droughts. Here is the particularly worrisome part. The rise in temperature has been in line with model projections, according to experts. But extreme weather events are occurring faster than predicted. And that is the new normal for a world that is only 1.2 degrees Celsius warmer than it was in pre-industrial times. But this could be just the tip of the iceberg. The updated climate pledges by countries, including India, will lead to a less than 10% cut in projected 2030 greenhouse gas emissions. A 45% reduction is necessary by 2030 to limit global temperature rise to 1.5 degrees Celsius by the end of the century. Instead, the Earth is on track for a temperature rise of 2.4 to 2.6 degrees Celsius by that time. And that is if the current conditional and unconditional pledges are implemented. This is the sobering verdict of the United Nations Emissions Gap Report released last week. Climate change expert Avantika Goswami points out that this has already been a record year for extreme weather events across India. The impact on farmers' livelihoods, public health, and labor productivity has been very real. Indians lost 167.2 billion potential labor hours due to excessive heat in 2021, according to The Lancet. Experts have also linked the recent projected drop in wheat production to climate change. So, what will the lack of ambition in climate pledges observed by the UN mean?
It simply means that countries like India are going to continue to face worsening climate impacts.
India updated its nationally determined contribution in August, and New Delhi is likely to raise the issue of climate finance at the upcoming UN Climate Change Conference, or COP27. It is being held at Sharm el-Sheikh, Egypt, between the 6th and 18th of November. Highlighting how crucial India's goal is, climate change expert Ulka Kelkar points out that developing countries like India have also made conditional pledges. These require additional finance or technology transfer. The Emissions Gap Report says the success or failure of these pledges will be the difference between 2.1 degrees Celsius of temperature rise or 2.9. To meet the Paris Agreement's 1.5 degrees Celsius goal, total climate finance must grow more than 10 times faster than current rates. Instead, the rate of increase has slowed in recent years. Total climate finance must reach $5.2 trillion per year by 2030, according to the World Resources Institute. This will mean an average increase of $460 billion a year.
That's the direction of travel in which we need to go. And the last few years have been frankly very disappointing on this count.
Developed countries had pledged to hit $100 billion in climate finance a year to developing countries by 2020. They have still not delivered on that front. But Kelkar says that negotiations have started for a new, much larger climate finance goal for beyond 2025. She says India's COP27 agenda will be that a serious and substantive number is agreed upon. That will make it possible to undertake the actions needed in this decade. New Delhi will also push for more finances through grants instead of loans. Goswami says climate adaptation is an area where India must make its demands loud and clear at COP27. After all, India is the 7th most vulnerable country with respect to climate extremes. Its agenda should be increased financing and greater clarity about the global goal on adaptation. Another agenda item will be operationalizing the Central Loss and Damage Fund for those disproportionately affected by the climate crisis. India's contribution to historical cumulative CO2 emissions is just 3%, compared to the US and the EU's 25 and 17% respectively. Goswami points out that India has played by the rules of the Paris Agreement and is doing its fair share, if not more. Nonetheless, it will face calls to make more ambitious pledges. In the immediate future, India must push through its climate finance agenda at the COP27 while navigating the brinkmanship that is a common feature of such conferences. After all, as the COP27 target statement says, making finance flows a reality is an urgent priority amid the current financial crises, debt challenges, and increasing interest rates.
believe that 5G connectivity can reduce cost, energy consumption, and emissions too. Meanwhile, the launch of 5G services in India is set to gain full steam in the next few months. As telecom players pick up pilot launches in select cities, is it time to add these stocks to your portfolio? Well, we decode in our next report.
The much-awaited 5G services are rapidly catching up with consumers as telecom majors carry out beta trials in several cities. While Bharti Airtel is currently undertaking such trials in 8 cities, Reliance Jio's testing is also underway in 6 cities. Vodafone Idea, however, hasn't mentioned any specific timeline. It is expected to roll out 5G network progressively over the next few years. The progress is reflected in the telco's September quarter results as well. Bharti Airtel's consolidated net profit jumped 89% year-on-year on a 22% revenue growth in Q2. The company aims to provide 5G services across all of urban and key rural areas by March 2024. Reliance Jio's net profit, on the other hand, rose 28% year-on-year during the quarter. Jio targets complete 5G rollout by December 2023. Both Jio and Airtel saw their average revenue per user growing sequentially to 177.2 and 190 rupees respectively. Against this backdrop, the prospects for the telecom sector remain bright. Analysts believe affordably priced 5G services will likely be another disruptor for the industry.
Going back 10 years when 4G was launched, it was expected to be a premium offering, but the game changed with the launch of Jio in 2016. 4G became a disruptor that changed the way people consume data as it was available at an affordable price. Early indications are that 5G too would be attractively priced initially at 4G price. Now, 5G will be a far bigger disruptor than 4G. Other than super speed and low latency, IoT would be the biggest beneficiary of 5G, and it will drive the major digital transformation, especially in the fields of business processes, transportation, smart IT, and public safety. In India, the major beneficiaries would be the telecom players. Despite the fine pricing for 4G, both Bharti and Jio created wealth for its respective shareholders. Now, 5G will further increase the divide between them and Vodafone Idea, which would be a distant third, whereas others will be in the category of also ran. So, effectively, it would be a duopoly in the longer run.
On the basis, Bharti Airtel has rallied the most among peers so far during FY23 with a 10% gain, while Vodafone Idea has shed 11% during this period as compared to a 4% rise in the BSE Sensex. However, analysts at Jefferies have downgraded Bharti Airtel's stock to hold as they believe its growth potential has largely been factored in. With upcoming state elections, tariff hikes are most likely to take place in Q4. Besides, network costs as well as operating expenses are likely to rise faster amidst 5G rollout and launch, according to Jefferies. The rush to launch 5G services will also benefit telecom equipment providers, analysts say. Stocks of Nelco, ITI, and HFCL, for instance, have gained 5 to 16% so far since April.
Among the ancillaries, I would be bullish on Sterlite Technologies as well as HFCL due to the order flows during the first 2 years of rollout of 5G.
Besides, HFCL has recently been selected among 42 others for the production-linked incentive scheme for telecom and networking products to support import-dependent verticals of 5G equipment. That said, the market will track global cues today ahead of the US Fed's policy outcome. Adani Transmission, JK Paper, and M&M Financial Services are some of the prominent companies that are scheduled to announce their respective September quarter results on Wednesday.
The government has decided to offer the use of indigenous 5G testbed free of cost to recognized startups and MSMEs till January next year. It will help startups and small enterprises validate their products. Let's find out more about it.
A lot has been said and written about the application of 5G for enterprises and individual users. While you and I look forward to more immersive experience with our devices and collaboration tools, enterprises in India face a looming capacity challenge. Businesses in India are now at an early stage of discovering the potential of 5G in relation to industrial automation, process management, private networks, and more. Taking a step towards becoming self-reliant in that direction, the government has recently announced a 5G testbed project for startups and industry players in India. The idea is to allow R&D teams of Indian academia and industry to test and validate their prototypes and products locally. Engineers examine 5G applications in testbed environment before a commercial rollout. This allows them to understand how the network will perform in real-world applications. In the absence of the indigenous 5G testbed, Indian startups and industry players would have to take their products abroad for testing and validation purposes. According to Commerce and Industry Minister Piyush Goyal, the indigenous 5G testbed would help in digitizing the economy, boosting startup ecosystem, improving governance, ease of living, and facilitating ease of doing business. A collaborative project led by IIT Madras, the 5G testbed has been set up at a cost of about Rs 220 crore. It will be available at 5 different locations in the country. Other institutes collaborating in the project are IIT Delhi, IIT Hyderabad, IIT Kanpur, IIT Bombay, Indian Institute of Science, the Society for Applied Microwave Electronics Engineering and Research, and the Center of Excellence in Wireless Technology. The testbed comprises 5G base station and user equipment nodes with support for most 5G related services to replicate deployment in a real-world-like environment. These services include enhanced mobile broadband, ultra-low latency communication, and massive machine-type communication including narrowband IoT services. Likewise, the testbed supports both sub-6 GHz and millimeter wave operating frequencies. With 5G testbed, the local 5G equipment makers would be able to design and fabricate high-end communication components such as baseband processing units, remote radio heads, RF modules, core networks, network interconnects, and baseband algorithms and software. That said, the indigenous 5G testbed would allow industry players to develop a fully functional 5G stack that would be essential for the rollout of Indian own 5G standard referred to as 5G-I. Ashwini Vaishnav, Minister of Communications and Electronics and Information Technology, recently said that the indigenous 5G stack is in the works and would be readied by September to October this year.
By the nation's trusted bank, SBI, the banker to every Indian.
Before India launched its own 5G testbed, industry players used to go abroad to test and validate their products for installation in a 5G network. That is all for today. For more news, views and analysis, please log on to business-standard.com. If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.